Usually you will find this topic as maybe national income accounting methods. They call it national income accounting methods. So what I did yesterday was I had a circular flow diagram, a bird's eye view of the macroeconomy in a very simple form, in a very simplified, oversimplified form. There are two groups of economic agents who are active, one called households, which are families, and another one called the companies. The basic difference is households are offering services, and you know what services they are, labor services. Households are offering labor services, and the firms are offering, what do you call that, goods. And also they offer a very important thing. They provide the households with income. Because without the income, households cannot purchase the goods. There's nothing is free in that sense. So at the circular flow, now I'm going to take you into how we measure the activities here. One important economic agent which is missing, I told you, is like the sun or the moon in relation to earth, which is outside, is outside the economy there is one very important economic agent called government. I left it out. If you have the government as also a part of the diagram, then we'll have the connecting lines with both households and firms, because households also offer services to government. Government offers income to them. You work for government in the form of, I work for the government organization. Governments, the typical workers are the MPs, MLAs, bureaucrats, police service, police people, defense service people, and they earn an income, and in return the government provides services to the citizens of the country, which are usually known as public goods. You know public goods? The main difference between public goods and private goods is public goods, although we call public people, but in economics public means government. So government goods cannot be owned by an individual. She cannot say IIT is mine, you are going to teach to me only. It's a public good we offer here. Government goods, the road, GT road. He cannot go to the GT road and suddenly एक झंडा लेके चले गए, बता दिया शाम को आज, this GT road belongs to me. One cannot say that. So it cannot be owned privately. But a private good, if I go to, say for instance, to the bookstore and buy a pen, it can become a private good. I pay for it, I own it. And if I scribble my name on it, I can say, look, my name is written on it. You cannot own it. All right. And doesn't mean that the public goods are not paid or money is not spent by the citizens for a public good. That's not true. Government provides the public goods in an indirect manner, in the sense it collects the tax revenues. Not in the name of a public good, but it collects a general thing called tax revenues, which they then spend on public goods. All right. And there are some public goods which are like impure public goods, etc. I need not get into that. So this is something which is missing from the circular flow diagram I had yesterday. Government is missing. I just didn't want to complicate that, but I'm just telling you. Now, having done that, if there are three agents groups, how we aggregate the activities, measure them. So what I want to tell you is that the formal name for measuring or telling you how to measure aggregate economic variables is called national income accounting methods. It's an accounting procedure where you collect the numbers, data, company accounts hote hai, how much have been the expenses, how much have been the revenue. You collect the data, add them up. You know, company accounts hote hai. Similarly, for the macroeconomy, we also add things up. How we add up? We cannot add chairs and tables. 50 chairs from 90 tables, you cannot add them up. So there has to be a common unit, which is called in economics a numeraire. There has to be a numeraire in terms of which you can measure the value of that item. And the common practice is to use the market price. And the market price is in rupee. And in India, everybody knows rupee. Everything can be measured in rupee. Even services can be measured in rupee. A doctor provides you with some health services. You pay him a fee. The doctor service is measured in terms of the fee that you pay. A better doctor asks a higher fee. So it's a better quality service, you pay higher fee. The higher the market price. Roughly, you can conceptualize like that. So we use rupee or money. In US it will be dollar, in England it will be pound, in Russia it will be ruble, depending upon the currency you have, and measure the value of the goods in terms of the market prices. There was a question about, sir, market prices can differ. We don't get into that. These are statistical issues. If there are different market prices, one can go by which is the best judge of the market price, or one can go by an average of the number, various methods they can use. All right, we do not get into the nitty-gritty of these things because I won't be asking you to compute the value of the GDP in Kanpur area. If I ask you to do that, then you would be running back and forth between my office and wherever you're working, because every time you try to do that, you realize how many problems are there, which you even didn't think about it. But at the theoretical level, given this is a theoretical course, national income accounting practices suggest there are three alternative approaches which follow from the circular flow diagram: the output method, the income method, and the expenditure method. So I started out with the output method. And the output method, as the name suggests, you try to find the value of the output produced in a particular industry and then add them up across all industries or all sectors of the country. So you can break up the economy into various sectors. I need not go into that either. How many sectors are required? How many sectors are there in India? I need not go into that. Broadly speaking, market price would give you a valuation of the output at the end of the financial year as to what's the total amount that you have produced throughout the year. Not what you're producing at the end of the year, but the total value that you have produced in a financial year, which is 2012-13. Which begins in 1st of April 2012. It started a new financial year and it will end on 31st of March 2013. Kitna hua hai output? Achha. Simple it looks like conceptually. Practically it's not simple. Not at all. Horrendous. Imagine how many visits you have to make, how many people are required to get the data. Enormous amount. Achha. So you measure the value of the output. But the problem, another one is that you value the output, but it says it has to be the final goods. My goodness, final goods, that means the goods the consumers use. Now what will happen to the value of the output of the intermediary goods, which are not finished, which are not final goods? Consumers cannot go into a steel plant and can tell them, give me some steel sheets. They don't ask for steel sheets there, steel pipes. They go into some other company, some other factory to be converted into something called a final good or a finished good which the consumer uses. Like pots and pans, bicycles, automobiles, wherever they are used. So the problem becomes, therefore, when you collect the numbers, you make sure, if you take the intermediate goods output from the factories, and then when you take the final goods output from another company, another factory, set of factories, you make sure the value of the intermediate goods are deducted. Just the market price valuation is not going to give you that, because it will be a double counting. You take the market price of steel sheets from steel plants, as well as where market prices are meant as producers' price to the companies who are buying them. You and me won't buy them. Companies would buy them. We're producing something else. These are intermediate goods, semi-finished goods. And then you go to the automobile factory again and you count the value of automobiles you have produced. Now what happened is, therefore, when you go into aggregate economic activities, you make sure that you don't double count. This is one warning that I'm telling you. Now GDP, GNP difference I've already told you. GDP is essentially what everybody produces in a country. Foreigners are domestic factors. Indian companies and foreign companies is Indian GDP. But Indian GNP would be only Indians wherever they are producing. So there is no geographical boundary. Indians can be producing in Japan, in Korea, Middle East, anywhere they can be producing, all right? So you have to make sure that you are careful as to how. But the problem is to collect data again. So what they often do, textbook rules tell you, they construct a variable called net factor income from abroad. Because what happens typically is if a company is working in some other company, at the end of the year or throughout the year, they start remitting funds, their income, back home. I remember when I was a student, I used to have some extra cash. Sometimes I used to send gift checks to my family. You can go and buy something. This is called remittance. But this is not a great earning I had. I was only a student. But the company is earning. There can be a lot of money coming back. Similarly, foreign companies working in India can be remitting funds back home to their own country. So back and forth, there will be a flow of funds because of factors of production going into another place geographically located and producing something. So they would construct a variable by the plus and the minus numbers they would do, and they will call that net factor income. Net essentially means the factor income that has come in from the Indians abroad minus the factor income that is going out of the foreigners who are working in India. Then I gave you the example of Japan's GNP. That will be fascinating to see. This is our country which has a GNP greater than GDP, substantially probably still. Not all countries have that, remember. But it's a very different country. So it will be interesting to study the GNP, GDP value of all countries across the world. Somebody can do a project and can get a very good idea, if the numbers are correct, as to which countries are more into going into another country working and which countries are more into bringing foreign capital into the country and making things happen. Do you understand what I'm saying? It is fascinating. You can reflect on that. All right. So macroeconomics in some sense is quite interesting. Then I come to the market price thing. It's nice to say that you do the valuation at market price and the problem is solved. But there are many things which doesn't have a market price. Just now I told you, doctors' services. If you go to a government hospital, you buy an outdoor ticket and you get your examination done, there is a market price fixed. Government hospitals has a fixed nominal price. But there is no market price of private practitioners, what I've seen. From doctor to doctor, from depending upon type of specialization you're looking for, an orthopedic doctor or a general physician, to an eye specialist, to an ENT specialist, to God knows what, it will keep on varying, changing. All right? Moreover, there is no banner, no signboard outside usually. Sometimes some doctors' chambers I've seen, consultation fee amount is written. Often you don't know the price. After you have been examined, then the doctor's assistant or doctor himself tells you this is the amount you have to pay. Now, what we do is that if there is no market price, we use indirectly the value of the service we measure in terms, for instance, in case of doctors or lawyers, the fee they ask. All right? And how you get the data is very interesting. If you are truthful, you would file an income tax return to the government at the end of the year and will tell them total income you had. So a particular doctor's total income would be known. So now you have done a damage to the definition of output approach, because you are saying output of a good can be valued at market price, and then those values can be added up to the GDP value. But now there are certain items, particularly in the service sector, like the services, doctor services, lawyer services, which doesn't have an output sold in the market, like bazaar ke maafi, हाट बाजार देखा मार्केट डे सब सब्जी वाला चले आए, डॉक्टर्स लोग उनका सब डॉक्टर इकट्ठा एक जगह में लिखा है डॉक्टर्स मार्केट, बैठते नहीं है, मैं तो देखा नहीं, आप देखिए कोई बिल्डिंग में लिखा है डॉक्टर्स मार्केट and all doctors come on a particular day and sell their services? It's not. So what you're doing here, the value of his or her services, you're trying to measure in terms of the income that he generates for himself by asking a fee. So in the output approach here, you get into trouble because some items cannot be measured in terms of market prices, because they are not sold like a bicycle or an automobile or a furniture at a market price. There is an indirect way of calculating the value of the services using an income approach. So now what you see, I'm using a little bit of income approach also to complete my job, which started in the output approach method. Are you clear what I'm trying to say? So certain items cannot be measured at market prices, where income approach is required to indirectly measure the value of the services. That is the contribution to GDP in a particular financial year. Can you name a very big sector in India where the income approach is used, or in any country as a matter of fact? There is no market price valuation. Income approach means the return that the factors of production get. There are 4 factors of production: land, labor, capital, and organization. You tell me a sector in India, or in, as a matter of fact, in any other country, where the entire thing is measured, the value of the output. Output can be either goods or services, measured in terms of income. There is no market price. Any answer? Any hint? Any rough answer? Even if you have it is incorrect, it doesn't matter. Huh? Military, very good. Anything else? Then, Education, very good. Lawyers, of course, I have already said that. But one large, the entire government sector. Some goods they produce in public companies which are government owned. In India, we are having a public sector. But most of the government goods are what? Police services, defense services, construction of road. A GT road, when it gets renovated, do they sell the services to you at a price? There is some toll tax at some places. On Lucknow-Kanpur highway, I saw there is a toll booth now. The Cadwork, they ask for a toll tax to use the services. Usually not. So the entire government sector output, which are services, the MPs, even if you like it, you may not email them, even if you dislike it, you may not like the MPs and MLAs you have, but they are supposed to be providing you services because they get a fee. And how is the services of MPs, MLAs, although they spend time, waste time in the parliament shouting at each other, but on paper, they are supposed to provide services to the people, their elected representatives. How is the services measured? By the salary they get. Again, the income approach. How is the police services output measured? In terms of salaries and some factors of production that has gone into construction of the buildings, buying the jeeps and the cars, which are like capital goods, and the ammunitions and the rifles and the guns, or are like tools. All together constitute the police services, which is supposed to protect you. All right? But in India, police does sell services, we know that, but that's a black market, underground economy. If you ask services from police, they ask you, how much is the fee? In fact, you should first ask, how much is your fee? Then you tell them what services you need, maybe. But that's an illegal activity. Usually police services or defense services, like defense minister cannot come, or the army general can come and tell you, oh, I'm not going to protect you if there is an attack from Bangladesh tomorrow. It cannot be exclusively for some people, from some section. Public good means it is meant for all. If the defense minister, or the generals or the army and the defense service have any job, the job is to protect everybody, irrespective of who you are. He cannot say, you're close to Bangladesh border, you're too much influenced by the Bangladeshis, I'm not going to protect you. Or they cannot go to Kashmir and can say, oh, you're too close to the Kashmir, Pakistan occupied Kashmir border, you're too much influenced by the Pakistanis, I'm not going to protect you. It may happen, but it doesn't happen on paper. So what I'm trying to tell you, there is the entire government sector output, which has to be counted in a year and will be part of GDP or GNP, unfortunately doesn't have a market price. So how would you do the valuation of the services, the output contribution? It is done using the income approach. So even under the output approach, we started trying to make large claims, tall claims about how the valuation would be done by output is not entirely possible for a country. You do start mixing various approaches even under one. You borrow from other methods. Remember that. All right. Next, somebody asked me a very interesting question. What government services? Let me give you an example. Housing is a service, remember. So I rent a flat. Tomorrow I rent a flat somewhere. Suppose you get a job, you go to Bangalore, you rent a flat. You are enjoying the services, you are buying the services at a rent. So the service valuation is a contribution to GDP, remember. And that is the rent that you pay to the landowner. And the landowner is supposed to report that income to government, and government is supposed to note it down. Acha housing service ke andar income itna hua hai desh mein. It's part of GDP, income approach. But suppose I ask you a question I used to ask in the exam halls. I'm not going to ask you anymore because it has become very difficult for our students to answer. Suppose you own your own house. Aren't you still enjoying the services? You're living somewhere. छत है ऊपर में, दीवार है, अपना ही मकान है, किंतु रेंट तो किसी को दे नहीं रहा है. So what would happen to the valuation of those services? Are they excluded from GDP or part of GDP? I used to ask this question. Can anybody have any answer whether they would be part of GDP or excluded? Yeah. Excluded, one person say. I'm going to count. Okay.
When we are working in a rented house, there is some expenditure and there is some income. Both. Because you are spending and someone else is earning.
Okay, there can be some concessions made, all right.
So when you are in your own house, you are neither earning anything nor spending anything. So the net flow of money is not there.
That's why I asked the question in the exam hall, is the services part of GNP? Yes. You know why? It's called imputed services. Note the word. In economics, you have come from outside economics. These are new words. These are called imputed services. You have imputed values. You try to find out the imputed values of these services. The imputed values is, directly it cannot be measured, but indirectly it can be measured. If I am living in my house, I have constructed my own house, I'm living it, a valuation would be done for the services that I enjoy in terms of, if I had rented this house to somebody, how much rent I would have asked, which is the average price in the neighborhood of a similar house. Or one can ask the question, if I had rented this house from somebody, how much rent I would have been asked. So although I'm not paying any rent, as he said, there is no money flow, no cash flow here directly other than property taxes. There can be an imputed value of the services. But what is happening in countries like India, there is a municipality-based valuation of properties done. And they charge something called property taxes. All right? I think what governments are doing, they're not going into imputed valuations of the entire amount of services enjoyed by a person who self-owns the house. Instead, the property taxes are indirectly measured the value of the house or the services I enjoy. I pay the tax to the government. That is taken into consideration maybe in the GNP. Maybe. I have asked the Central Statistical Organization people as to how you get the self-owned house or flats or whatever services as part of GNP. So here is something very important for you to understand between the stock and the flow variables. There is a flow of income, as he said, there is no cash flow. He used the word cash flow. There is a flow of income in some cases like a person who has rented a house or a flat is paying this rent to the landowner. So every month he pays that amount. So it measures roughly the services he's enjoying, all right, which is an income to the landowner or property owner. But there are some stock which can produce services, houses where there is no income flow generated, but the service flow is generated. Every year he lives there unless it falls down. Like the other day I was returning from Lucknow, I saw the old Rajas used to live somewhere and the land is elevated on the river bank of the river Ganges very high, and there's some old structures still there on the top, which you look at the brick sizes, you know they are century old constructions. They can break, they can fall any time, in fact. If you ever go to Lucknow via Kanpur Lucknow highway, you will see that. Now Amazing sight. God knows. And when parts of that hill-like thing is opening up with some erosion or something, you can see old structures hidden inside. So deposited sand, etc., dust deposited on the old structures got buried underneath, and the new structures came up. Still, even the newer ones are like century old, which are visible at the top. It's an amazing sight. Now, what I'm trying to say is here, if these services are enjoyed, if you live in the house, then you're enjoying the services. Although there is no cash flow, no income flow, it is still important to know that it has to be measured as part of GDP then. If something is providing services, no cash flow is there, it's like an invisible thing, but still part of GDP or GNP, and it has to be valued in rupee terms. And I'm trying to tell you that imputed value method, you indirectly measure that. All right? The other question that came up yesterday, yeah.
The food that is cooked at home.
Yeah. There's a value added, but it is never part of GNP. I'm coming to that. There are certain things which are typically value added, but the value is not added to GDP. The economic activity adds value. Buying the sabji from the gate and then preparing, your mother or anybody prepares the food at home, is adding value to it. I hope it tastes better than just the raw sabji from the gate that you buy. When it is cooked, so value is added, but it is not sold to you. Often these kind of activities go unnoticed, ignored in GNP. I'm coming to that. But there is a value added, of course.
So what about the appreciation in the value of the property? Should that not contribute to the GDP as well?
No, I'm coming to that. No. Where it would, I would coming. Very good point. I'm very happy. We'll have a long session here because you have just started thinking and asking me the right questions. And hopefully I will have the answers for you. But sometimes I don't have answers, to be honest with you. Now, the housing services, I have told you a little bit. Now come to a typical thing which he is getting into. Suppose there's a property, a house, I owned it. In India, you don't see that much. If you go abroad, which many of you would, you will see if you're going down the lanes of cities, there are beautiful houses, locked houses, a small garden in the front, a lawn, not a garden, a lawn, and there is a signboard like a thing, a pillar and a notice. And then, not the owner of the house's name, it's a company name. So this is a realtor company, R-E-A-L-T-O-R, realtor company, property dealer, whose mobile numbers, when I was there were no mobile numbers. I hope they have mobile numbers now. Landline numbers, maybe email address also. There, or website address. It doesn't mention a price. It doesn't mention who owns that property, that house. It only says the name of a company and it announces it for sale. Now, this is a realtor company, and the typical business pattern is when I, as an owner of a house, wants to sell the house, I get in touch with the realtor company. It's like a middleman. This company gets in touch with potential buyers, arranges the transaction between me and a potential buyer at a price which is agreeable by both, to both. When the deal is done, he takes a commission, 5%, 10%, whatever. He announces that beforehand, what price he will ask. And then he pockets the commission, and that's his business. Coming to your question, an old house is sold, typically in current, unless there's a deep recession, the prices of goods are escalating, particularly property prices escalate. They keep on increasing. So this man may have bought or constructed the house at the price of, say, 20 lakhs, now selling it at 1 crore 10 years later. He clearly makes a money gain. This is called capital gain. This word is called capital gain, often used in the stock market. In the stock market, you can make capital gain or capital loss. This is not actually any value of output produced. No new house has been produced. An old house changing hand, ownership. In the process, the first owner makes some money, and the second owner pays a large amount compared to the first owner, where the capital gain is involved. You would ask, sir, Is it part of GNP GDP, the new price of the house? No. Nothing new has been produced. No new services have been offered. The only service that has been rendered is the middleman, the realtor services, who negotiated the deal and arranged the transaction called buying and selling of the house. And he pocketed a commission. That commission indirectly measures the services rendered, which is absolutely new with respect to that house, is the services regarding buying and selling of the house. So the realtor company's income, that commission, measures indirectly the value of services rendered, which should be part of GNP GDP, not the old house. Clear? All right. This is happening often in economies which is based on, like Kanpur, largely trading economy. What Kanpur industrialists are doing, our businessmen are doing, I have been told, except a few areas, is that mostly they buy goods somewhere, come and sell them here. So they make a capital gain, which we call loosely profit. So nothing new is produced, so Kanpur economy will not show that as an output. Say the Lucknow or Aurangabad or Allahabad or Noida or Delhi or wherever they are buying the goods, their economies will show new output, contributing to GDP. What would the Kanpur economy show? The traders making a capital gain. By offering the services to the local citizens, by bringing the goods from Aurangabad, Moradabad, Allahabad, Lucknow, Noida, whatever, whichever place, and selling them to you. You don't have to go there. So he's offering you a service. It's called the trading services. That will measure or will be part of GNP GDP. Is it clear? Is it clear? What is GNP GDP? All right. So these factor costs, these are called factor cost valuation or income method, often creeps into the output method because the output method alone cannot tackle the issues, all the issues. So you require imputations, you require factor cost valuations, which is income valuations of various things, particularly services, not goods so much, because as soon as it is a tangible good, it can be sold in the market at a price. So long there are services which are not tangible goods, doctors' services, lawyers' services, even trader services selling tangible goods but not producing them is not part of GDP. Only the services are part of GDP. All right. Now I come to the things he has been asking, this man here. Is that there are household items, services, which are never part of GNP, like the services of the mother. My goodness. Mother can give various services. Mother can cook food, which can be imputed value can be obtained by, suppose you have hired a maid to cook, then how much fee you would have paid her is measuring indirectly how much mother is contributing. It is not done usually. I guess data collection is a huge problem. So it is not done, mother services. Achha. Often there are services of the housewives in other respects. Say housewives, like I see my wife teaching the two kids, unlike my generation, the entire day. Because the school tells you that only thing you do in life now is you work, go back home and work. You don't play, you don't go elsewhere, all you have is homework to carry. Now if I had hired tutors, 2 tutors per day, per kid, I would have paid an income. Well, since my wife does it, thank God I'm not doing it, since she does it, she is contributing something towards GNP GDP which is not counted. Now there is a very important item here. So household activities often are ignored in GNP GDP. Maids. A classic case of India is the informal sector, where you don't know which maid earns what, how many hours they work, what kind of services they render. And we typically have in a colonial kind of past country like India, with a colonial past, we have the habit of hiring services. Abroad you won't find maids much. All right? There are cleaning ladies in institutions like restaurants, offices. But household families hiring cleaning ladies to clean the bathroom, to clean the floor, to do the cooking is very rare. But we, having a colonial past, we have the habit, because the Britishers used to use the Indians for that. Now the Indians are using the Indians for that. Achha, fine. We pay a huge income is generated, our money given to them. It's a transfer of income maybe, but an income generated because these are services. Arey bhai, every day they come and work. Every day they come and work, and that's why you pay them. But they are never part of GNP GDP. Achha. Now I come to various things, small issues, then I go to other things. There is this self-employed people. Self-employment, a very important activity in any country. Are these activities included in GNP GDP? I will explain self-employment. Self-employment, this is very important. The self-employed people. Self-employment is a very interesting thing. Self-employment is you do the thing for yourself. I do the washing for myself. I enjoy carpentry work. I made a table out of wood. All right, I've seen abroad people, I met people in fact, many years back. They took me to a house under construction and they showed me that the house they themselves are constructing. My goodness. But it's not concrete buildings. These are wood-based houses. So the entire house, this family is building for themselves. Everything, electrical fixtures, insulations, everything. There are manuals available which guide you to do that. So one can have a hobby. पागल है थोड़ा. इंडिया में कोई करते थे तो बताते पागल है ये. लेकिन उधर में करते हैं, पागल नहीं समझते हैं. It's a habit. They enjoy doing it. It's like a leisure work. Holiday time, weekends, they're working. And actually when he told me, I just couldn't believe. Under construction. Achha. But gadgets are available, manuals are available, guidelines. You just don't do it like a foolish person who doesn't know and try to do something which is beyond his capability. Achha. Now, this self-employment, when you do that, is it part of GNP GDP? Usually not. I grow vegetables in my back garden, vegetable garden, which is very common at IIT. Is that output part of GNP GDP? No. The vegetable I buy from the market is part of GNP GDP. The vegetable that I grow in the backyard is not part of GNP GDP. All right? Similarly, the activities, particularly in a country like India, which is famous for that, called underground economy activities, which we call black market, do they really come under GNP GDP? No. So I should mention, coming from India, shouldn't be shy, should mention underground economy. This is a famous thing. Even overground people, so-called, are very much involved with underground activities. They live over the ground, above the ground, they're known. But they, underground activities. But they do earn underground income. You went to rent, tomorrow you go to Bangalore. This is typical story in urban India. You go to Bangalore, you want a flat to be rented, single bedroom flat. You got a job there. Typical IIT Kanpur student stories. If you don't know anybody, if you know anybody, you start sharing it with somebody. Later, when you become senior, you earn more, you have your own flat. And sometimes you can go and start your life beginning with renting a flat yourself. Or say two friends went and looking for a 2-bedroom flat. And both of them went to a realtor, which are called real estate agents in India, property dealers. They would tell you the rent, they will show you around the houses, but one thing they would do, which is called salami in India, they will take 3 months, 6 months additional rent, for which they will not give you a receipt. And then you are paying every month the rent. That's an extra income. All right? So this is the black economy. These incomes, all right, are not part of GNP GDP. In India, at one point I was told, I've forgotten the number, the black economy is nearly 40% of the white economy. That big it has become. 40%, we don't have correct estimates. From time to time, a private researcher does some job, estimates the black economy in India. It has grown to the size, somebody says 40, somebody says 50, somebody tomorrow may say 60% of the total economy. So there is a parallel economy running in India, which is the black economy, underground economy, to that white economy. And you can imagine the headaches government has in collecting data. So we really don't have. So what will be your understanding? Indian GDP, GNP numbers, if you see tomorrow, will it an overestimate? Or will it a grossly underestimate? It's a grossly underestimate number. So you would ask me, sir, is it worth working on macroeconomic theory using Indian numbers where the numbers don't even properly measure the actual level of activities? I would say absolutely correct. But I cannot help it. Nobody knows the numbers. Parliament में अभी चल रहा है वो black money बाहर में कितना है, कुछ बिल आ रहा है फाइनेंस मिनिस्टर के पास से, बीजेपी उनके पीछे पड़ा हुआ है, यूपीए के पीछे, ये ब्लैक मनी बता रहे हैं लेकिन not revealing the names. ये फाइट कल चल रहा था टीवी में, and if BJP is upset, why won't you reveal the names? Why are you shy to reveal the names? Maybe some friends' names will come out. So we are here, so we are trying to protect the friends. So anyway, the problem is not black economy, black money stashed abroad. I'm not trying to confuse you, but the black economy in your country within the geographical boundary. So the GDP number is grossly underestimated. All right, are never part of that. The intermediary goods stuff I have already told you, is there in my notes. Now I want to tell you about trading activities. I have already told you. The value added approach I told you, you can measure GNP, GDP through value added. Or underground the, or upar aaye, and when it reaches the steel plant, it acquires a value because it is sold at a price. So long it was under the ground, it had no value to you. From zero, it acquires some rupee value. Then that ore mixed with various processes, chemical processes and other processes, becomes steel. All right, or alloy or whatever, combined with other metals, etc., other ores. Then acquires another value when it leaves the factory for some other. Then it goes to the steel plant, it goes to various places and gets converted into other products. Another value is added. So you can measure the total contribution in terms of value added at every stage of production. Production is just not one stage, which you understand, I hope. You have the furniture. Is it really the furniture being constructed in one stage? Not at all. The logs may have come from Madras. They transported all the way from the trees. They were cut to Kanpur, to some wood go down here, wood cellar, where they were processed a little bit, cut, given some shapes of woods the way carpenters are used to. It added value. So at various stages it is adding value. And then finally the furniture is sold. All right? So you need not take the final market price. You can measure these by value added at every stage. But the data has to be collected. Sometimes it is easy by furniture का price क्या है बताओ तो हो गया. इसका value added किधर से log आए हैं, पहले बार कितना value था. So VAT, have you heard of value added tax? VAT, just an extra point I'm mentioning. Have you heard of value added tax? Now do you understand value added tax, what it means? As soon as the value is added, a tax is imposed at every stage of the production, as opposed to the tax imposed at the final stage when it reaches the consumer. Value added tax, you must have heard this word, some of you at least. This is what it is. It's associated with these accounting practices I'm talking about. One more point I want to mention before I go to the income method or something else, and today's lecture would, within 15-20 minutes it will end and you can go have lunch, we will have only 1 hour lecture, is that how are inventories treated? In ManQ you have that section, you should read it. How are inventories treated in GNP GDP? Do you know what inventories are? You produced 500 shirts, your total output is 500, but you are taking the market price of the value of the good, so you are taking in terms of 400 that you have sold. What happens to the 100 shirt that remains in the inventory, which will be sold in future? Often companies, it is a rare thing when companies are producing and selling exactly the same amount. The production and the sale are two different numbers. Sometimes the sale number is more than production. Sometimes the sale number is less than production. How can it be the sale number more than production? It can happen because you have amount which was unsold in the past carried over to the present. But it cannot happen a lot with perishable goods like food items. Then you need cold storage, etc. Apples happen. You can get apple even now in summer. Do you think apples are produced in India now? Not at all. Again in winter it will be produced. So cold storage facilities are facilitating sale of apple even in summer months. All right? Acha. Now, inventories. These are called inventories. Now, what do the GNP, GDP people do with the inventories? Acha. This is what they do. I have an example which, this is entirely from Mankiw. Let me read out. He has given the example of the bread produced by the bakeries. If the bread spoils, nothing is added to GNP, GDP. Simple thing. However, factor payments like wages, etc. have been made, which has gone into the aggregate income of the country. Bread has been produced in the factory. Factor payments have been made. Labor को दिए हैं, raw material खरीदे हैं, वो आटा या मैदा वगैरह, ठीक है, चूल्हा जले हैं, bread को तैयार तो किया है oven में, factor payments तो हुआ, electricity bill भी दिए हैं. लेकिन bread, when sour, it hasn't been sold. So output approach is not showing any value. But the income approach would show some income generated. Very complicated situation. Now this extra income gets compensated by an equal amount of decline in profits of the bakeries due to spoiled bread. How you will adjust is the amount of bread that went spoiled will now get deducted from the profit of the company owner. All the income has been paid to the other factors. So the total income in the country, I will come to that, will be all factor payments and the profit also. So it will get compensated. Wage को दिखाया है, दिए हैं, लेकिन मेरा profit भी भाई down हो गया क्योंकि मेरा वो खराब हो गया bread. When sour, I couldn't sell it. So मेरा profit down हो गया उधर में. वो compensate कर देंगे. लेकिन if the unsold bread is put in the inventory to be sold later, cold storage करके रख दिया ठीक से, temperature control करके, ठीक है, वो modern bakery में हो रहा है. They will be considered GNP GDP under the assumption that bakeries have purchased the extra bread themselves, and they will put the number in GNP. For the current financial year, the unsold bread will be shown as the owner himself has purchased it. He's not going to eat it, probably all that bread, but he's going to purchase it, he will show. But what he's actually going to do, he will show that purchase, he will do that selling, actual selling, next period. Next period means it will not enter into any GNP GDP, which is an amount carried over from the past. So essentially GNP GDP talks about the output, production of services, not the sale. Sale can mismatch with output for various reasons. You cannot sell because demand is low, down, in recession, so you have inventories to be carried over to the next period to sell it. All right. However, GNP GDP has to do with production or output. Therefore, you have to count the inventory in the current period. And if it is not been sold, you count that as something you yourself have bought it. That's how it will enter the accounts books. Accounting methods is suggesting you count it as you yourself have bought your own shirts, 500 shirts. You're not going to use them. Actually, you would sell them next period. When you sell them, it will not enter in any book anymore. All right? Okay. So later when the inventories are sold, although no extra wages and other factor payments are made, they are not considered in GNP GDP anymore. Later, next period. They are considered inventory disinvestments. They are called inventory disinvestment. Inventory investment is you have increased your inventory for not having been able to sell it. Inventory investment बढ़ गया, inventory accumulation बढ़ गया. अगले टाइम पीरियड में जब उसको आप बेच देंगे वो आप दिखाएंगे इन्वेंटरी रिडक्शन और डिसइन्वेस्टमेंट. ऑलराइट, सो इन्वेंटरीज वुड मैच ईच अदर, balance them out. I'm going to come to roll of inventories later in macro models, very interesting. But have you understood what I'm trying to say? This is a very important item. Remember, in the real world, the companies don't produce only the amount they can sell this period. Companies keep on producing things. The selling part is done by another part of the company. There is coordination, but often it happens that you sell more than what you have produced in the current period. And often also it happens you sell less than what you have produced in the current period. GDP, GNP has to do only with production and output. You have seen yesterday in my listing on the tree on the board, the GNP, GDP has a sub-variable underneath it, subordinate variable, called the net national product and net domestic product. All right? And you wondered, sir, what is that net domestic product and net national product? Of course, it is something which is deducted from gross. What is it that is deducted from gross? Like net domestic product must be equal to gross domestic product minus something. This minus something in macroeconomics is known as capital consumption allowance. NDP, net domestic product, is equal to GDP minus CCA. CCA is known as capital consumption allowance. Or allowances. The capital consumption allowances are a very interesting thing. In microeconomics, when we learn microeconomic theory, when we talk about investment, we talk about gross investment and net investment. Same thing is here. The gross investment includes the net investment plus, we call that there replacement investment, depreciation allowances, etc. What is it? You look at the furnitures in this room. Tomorrow, when I buy a new table and add it here as a capital good, all right, or a new machine I buy, that is an addition to the capital, that is net investment. But tomorrow, when I spend money on repair of this table or the chairs or the boards there or anything else, the TV screens, etc., the fans, I'm making investments which are replacement investments, or making expenses which are towards replacement investments. That is, I'm replacing or servicing a worn out, even an entire chair has broken down, I buy a new chair to replace it, will not be counted as new investment or net investment. That will be part of replacement investment for this room. All right? And the new is absolutely new that has come, got added to it. So the gross investment expenditures of this room would be whatever repair work I have done, including replacing an entire table, entire chair, entire light point. All right? Or even an entire wall which got damaged. It's still not new investment. This room existed. Now what have you added new from day one compared to day one? All right? That is new investment. So capital consumption allowances, every year when companies and factories produce, they have wear and tear of the capital, the machines. including tables. Capital in this room would be tables, chairs, lights, which requires replacement from time to time, fans require servicing, wall paintings required, repair for seepages. So when you use and generate services or produce goods, capital wears out. It requires servicing, it requires replacement expenses. All right? So at the end of a production year or a financial year, the companies are supposed to report to the government, this much of money is required now to service and fine tune all my capital equipments to make them ready for the next financial year. So this is like a money set aside which government allows companies towards replacement investment or depreciation allowance of capital, which company would gradually spend in the course of the year, but government allows that. So from the gross sales value of goods, when the income tax is to be calculated, government allows companies to deduct CCA, which they have not spent, but they will spend. Some of it they may have spent already as a cost. So the profit is still not net profit, it's still gross profit that they're showing to the government. Then government allows those deductions and some other concession something, and then finally a net profit is arrived at on which the tax is imposed. So for gross domestic product, you are looking at anything that is produced. Some of that may be replacement investment goods. You see number of fridges produced. Some of the fridge has just replaced an old fridge, or some of the fans have just replaced an old fan, not an addition of a new fan. So how would you know that? How much of that has been produced towards replacing existing capital goods, and how much has been produced as addition to new capital goods, which we call new investment or net investment. So from the gross number of output that we get, we deduct capital consumption allowance as if capital consumes something. What it consumes is, it is hungry. Capital is always very hungry. It requires to be fed. It requires to be fed in terms of servicing. It requires to be fed in terms of certain parts not working, replacing them. Then again, it is functional for you. Like robots can then again produce cars in the next financial year. So NDP is nothing but what is the new that you have produced this year, which have been absolutely new addition to things that have been sold, as opposed to parts of it which are primarily capital goods that have been replaced. All right? It is connected with the concept of investment. In microeconomics, we teach that. By the way, I will have investment as a topic. You may enjoy it in this course. At the macro level, how investment is studied. Investment always has two parts, gross investment, net investment. And the difference is essentially this. Part of the investment expenditures of a company are often not buying a new machine. Part of the investment expenditures of a company are buying a machine to replace a worn out machine. Buy some portions, parts, to replace the worn out parts of a machine. At home even we have service engineers these days. They come and service our washing machines. We have capital goods at home which are called consumer durables. They all require servicing. Durable goods always require, because the fun of durable goods is you can use them for 10 years over time, 5 years, 8 years, 20 years. I have noticed in my case, every time I buy, within a couple of years when the warranty is over, I'm nervous, I buy a service contract. So Eureka Forska AquaGuard service contract. Because if it breaks down, it will be. Washing machine has a service contract. Fridge probably doesn't have. Computer doesn't have yet. I don't know. Many things have service contracts now. All right, service charges. Durable goods, whether it is used at home or in factories, require servicing. They would give you service over a period of time, just on one time period, but it requires servicing, and there with this concept of replacement investment and new investment comes. Very important. So I will discuss this more when I take up investment, a couple of topics later. But for the time being, for today, part of the output method discussion I had in mind is over.